Well, as promised, it's time for our special segment, Quarter Se Quarter Tak, where we bring you earnings expectations from each sector. Today, NBFCs are on our radar, and Gaurav joins us to tell us what do we expect from that space. Over to you, Gaurav.
Well, yes, when we look at NBFC space, let's see how are the quarterly updates and what's the landscape going ahead. So when we look at the quarterly updates, we have seen a quite mixed set so far. Retail focused NBFCs like Bajaj Finance and L&T Finance, they have reported healthy set of numbers on a year-on-year basis in terms of AUM growth. While on the other hand, M&M Finance, we saw a little bit of weakness. They reported around 13% growth in terms of the overall AUM. Now coming to the quarterly results expectations, when we head into second quarter, it is likely to be a tepid quarter for most of the NBFCs, but disbursement growth, that is expected to pick up, and this will be because of the asset quality front also. If we look at the challenges, they are likely to persist, but at the same time, we may see some kind of impact which will be offset by spread expansion. MSME and MFI, that is one thing that we should be watching out for, because here we may see some pressure to continue. But at the same time, when we look at the margins, they should get a lift, because this will be the first quarter where we will see the reflection of 100 basis point of repo rate cut completely. So that is something that we're expecting, that margins may actually increase. Now let's break it down in the segments. First, when we look at diversified financiers, now starting with this segment specifically, because we have seen already some of the updates coming up, and from here on it is likely to see that the disbursements, they are likely to pick up. Credit cost, that should stay steady, and at the same time, when we look at margins, we may see some kind of improvement in terms of margins. In fact, if we look at all these parameters, that is the reason why we've got some of the players who can expect profit to increase somewhere in the range of 12 to 30%. At the same time, when we look at credit costs, that is likely to remain contained, and that is the reason why ROAs, they are likely to remain stable for this quarter at least. When we move ahead to vehicle financiers, now AUM growth, that is likely to moderate, because if you look at Chola Investment, we have already seen they have cut down their growth guidance, and at the same time, if you look at the expectation now, Street is not expecting any kind of major growth, about 20% specifically in this sector. But when we look at the profitability, now that is still likely to stay strong, and this is because of the margin expansion from fixed rate vehicle loans. When we look at credit costs, that is something that we should be watching out for, because some of the brokerages, they expect credit costs to increase. In fact, when we look at some of the updates in likes of Kotak Mahindra Bank or some of the NBFCs, HDB Financial, we have already seen they are talking about retail CV and specifically some stress in CV segment. Now, second half, that could be better. That was because of the GST cuts improving demand and at the same time volume uptick. But for now, ROAs are likely to remain range bound for second quarter. When we move to housing finance companies, in this segment specifically, disbursements that are likely to remain strong, specifically for the players like Aavas and Aptus. In fact, when we look at some of the expectations, we are expecting, brokerages are expecting Aadhar housing to remain a little bit of weak in terms of disbursements. But when we look at credit costs, that is likely to move down. We may see improvement in net interest margins as well. And at the same time, all these parameters, these will help these companies to expand their ROAs anywhere in the range of 0 to 20 basis point. Lastly, when we look at MFI segment, now this is something that we should be watching out for in terms of the asset quality, because in terms of disbursement, we are already expecting some kind of weakness here. And at the same time, when we look at credit costs, it is likely to remain higher. And at the same time, when we look at the return ratios as well, we may not see any kind of uptick here. But from here on, it is expected that this segment will reach its rock bottom, and that is the reason why we may see some kind of gradual pickup, and this will be because of the non-MFI diversification, new MFI guardrails that we have seen. We have already seen RBI also relaxing some of these guardrails, and at the same time, MFI cycle, which is expected to bottom out. All this can actually give a boost to the expectation going ahead. Now, when we look at gold financiers, finally, we've already seen a huge rally in gold prices, and specifically when it comes to Muthoot Finance and Manappuram, we are expecting gold loans specifically to remain strong. In fact, for Manappuram, although the overall loan growth can be a little lower, but when it comes to gold segment, we may see this growing at around 20% even in FY26. When we look at some of the metrics, we may also see net interest margins to expand healthily for Muthoot and Manappuram both. And at the same time, when it comes to Muthoot, we are expecting to see around 25% ROE sustaining for FY26, and for Manappuram, profitability will also improve because of the provisioning in its MFI arm, which is coming down. So overall, when it comes to NBFCs, we are entering into a phase of selective resilience is what we can say, where we will be seeing a well-capitalized and secured lenders which are at a better place. And at the same time, growth is actually moderating, but at the same time, we will also see some kind of new upticks and new point of view in terms of the second half of FY26, which is expected to be better for NBFCs, not in terms of growth, but also in terms of margins.
Thank you, Gaurav, for joining in. We have with us Shweta Daptardar, Vice President, Diversified Financials at Elara Securities, joining in. Shweta, so just first big picture between the consumer retail financiers, the auto vehicle loan financiers, the gold financiers, and the housing. If you just break it up, or maybe we'll add the fifth one, MFI. If you break it up into these five, which is the segment you're most bullish on, where we will see growth and valuations are comfortable? And then we'll get to individual stocks and expectations.
Yeah, hi, good morning. Thank you for having me. So definitely gold financiers and mortgage lenders continue to dominate the overall credit growth and demand in the current scheme of things. Laggards is the biggest. Laggards have been still credit cards, where we have seen, although asset quality challenges receding, but moderation in or the softer trends in cards in force edition. However, having said that, we have seen certain green shoots now surfacing on the MFI and MSME credit. I mean, we would be certainly believing that second half looks very strong for MSME credit uptake. Also, personal loans pain cycle is fully behind. So we believe personal loans and MSME credit to sort of start looking up in second half of this fiscal. And largely the benefits are now flowing from the numerous tailwinds that we are seeing in the sector. So one is, of course, the domestic policy easing. I also believe another 25 bips rate cut is in offing before the calendar year end. So definitely the peak of consolidation or fiscal consolidation is behind. On net, the time is ripe for the credit demand to pick up. And I think that bodes really well for NBFCs. Not to forget, of course, the GST simplifications.
Yeah. So, Shweta, you called out two segments specifically, which you think will be really hot in the second half. You mentioned personal loans and MSME credit. So tell us the stocks as well, the NBFCs that are the best plays on this.
Yeah, so clearly two biggest tailwinds will be emerging in second half of the fiscal. We have seen bank rate card transmission now happening for the NBFCs, which is already in offing. Q2 numbers, whichever the companies have declared, we have seen interest cost materially coming down on sequential basis. So rate card benefits are flowing through. Juxtaposed to that, we have GST simplifications, which happened only at the fag end of the quarter. So those benefits will be fueling this consumption story. So definitely Bajaj Finance, L&T Finance, few of these smaller emerging mid-cap and smaller players in the MSME credit space should also start looking up. So yeah, net, it's a positive picture for the overall credit demand.
All right. Hi, Shweta. Good to hear your thoughts as always. On Gold Financiers, tell us how do you approach the space? Because, there are three notable players, so to call it. The large one is Muthoot, but that's trading at, I think, 3 times. You could correct me on that one, price to book. You have Manappuram, which could be the turnaround story with the new management in place, but that's at less than 2 times, I think so. And IIFL Finance as well has an element out there. How do you play this theme? And are you still confident about the largest name, which is Muthoot, or do you have a neutral rating?
Yes, Nigel. So we continue to maintain a positive stance on Muthoot Finance, and largely it's emanating from the fact that geopolitical upheavals continue to keep gold price on the higher side. I mean, of course, knocking off the near term or the latest volatility. Having said that, as you rightly pointed out, Muthoot is already trading at 3x plus kind of valuations FY27 price to book. What we are advising here to the clients is so Muthoot is clearly an accumulate on every dip or correction if at all it's happening, because even as we move ahead next year, even if you factor in certain volatility in the underlying gold prices, Muthoot is poised to deliver 20% plus growth. and 20% ROE. So that's pretty strong and pretty much justifiable as against the current expensive valuations. Coming to Manappuram and IFL, yes, there is a turnaround story, both sort of surfacing for both of these names, but apparently that's been largely priced in. So Manappuram, particularly the new management, the strategy, the kitchen sinking, the execution will now determine the second leg of re-rating. For IFL Finance, yes, the gold franchise is definitely picking up, but overall console ROEs, I think those are still not yet there to the desirable levels. So clearly, Muthoot is a winner, and I think we will definitely see the stock rally sustaining for another 1 year or so.
Okay, all right, Shweta, thanks very much. Very helpful conversation. So it seems good times are rolling in for NBFCs as well as general demand for credit picks up, and of course, perhaps we have slightly more generous RBI with a slightly looser policy in the coming months as well.